What is a stablecoin? It's something that's guaranteed, if Bitcoin stays decentralized and secure, to lose value against Bitcoin at the same rate as the US dollar. It's guaranteed to. So why would you use that? Right? You have a guaranteed loss against Bitcoin. But if you're trading the stability, which most people will do around the world because they think the US dollar is so much better than their currency, so they'll naturally do it. And you'll have all of these people around the world believing that, yes, I finally can use this other thing that is also funding the centralization of everything we're talking about.
Bitcoin remains a strong contender in the risk asset race, with mixed signals hinting at a potential bullish turn. Despite recent volatility and uncertainties, Bitcoin's fundamental strength is intact, bolstered by rising institutional interest and favorable macroeconomic trends, setting the stage for a potential surge. However, Jeff Booth, a prominent Bitcoin expert, highlights the limitations of stablecoins, arguing that they fail to deliver true decentralization and security. With a sharp focus on Bitcoin, he envisions a future where Bitcoin transcends its role as an asset measured against the US dollar to become a global currency for all 8 billion people. But there's a catch. Booth cautions that valuing Bitcoin in traditional fiat terms reinforces the old financial system, limiting its revolutionary potential to reshape global finance and decentralize power away from centralized authorities. However, Booth hints at a breakthrough. Innovative Layer 2 solutions are already being developed on Bitcoin's framework, promising to shatter these limitations. The question now is, will Bitcoin rise to the challenge and transform the world, or will it remain just another digital asset? Watch clips from the interview for further insights into Jeff Booth's conversation with Walker. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
If these systems are incompatible together, and you're measuring the incompatibility through the US dollar, what you're actually saying is, I'm trading Bitcoin for a US dollar, or I'm thinking in that trade. And you're making the US dollar strong, or you're allowing this attack vector to become more prevalent because of those actions. So Bitcoin has to be used as a medium of exchange for it to achieve. Now remember, there's two different versions of a world, many different versions of the world. I'm talking about the one that I see. The one that I see in Bitcoin, 8 billion people in service of 8 billion people, and all of the productive capacity, not misaligned capital, not bullshit, not made up money that influences some, that monopolies that extract value, not an extractive system. I am talking about 8 billion people in service of 8 billion people that we can't even see today. For that to happen, Bitcoin needs to be used as a medium of exchange. And it needs to be native inside, not other tokens and other things that will be captured. It needs to be, and now if you pull on that thread, we know Bitcoin on layer 1 can't be used by 8 billion people. And I want to just say something quickly on that. It's the irony in talking to people who say there's no utility in Bitcoin, when the utility is the entire global wealth of a system change. It's staggering. There's never been a bigger utility. By having decentralized and secure, you remove money from the state, and you allow the free market to work. There has never been a bigger utility, and then what comes on top of that as a protocol, you're early in a cycle of building on top of that turns it into a money that's native to the protocol. And we have to remember, any one of us as Bitcoiners too, we were once those people who didn't understand this. And so we've all, it's a journey to be able to get there. And that journey goes deeper and deeper. And something that's this deep, that touches all of humanity, obviously touches everything else. It has to. It's the center of, money is global trade, and all businesses and all political systems, and it's a center for everything we do. We trade with each other to try to get more value around the world. So obviously something that impacts that has to impact everything we do. And this change in an operating system from one that was extractive from us to one that was cooperative, that gave back to us, would be really difficult to see, especially if you're measuring from the system. I'm just what I'm arguing is everyone measuring U.S. dollar Bitcoin in price to U.S. dollar or whatever piece of paper they want to measure Bitcoin by, they're reinforcing the trade. That's actually why this whole thing turns into an Orwellian control system way faster than people realize that are pricing in a U.S. dollar, because see. And again, this is going way back, but all of the things that are being played out today, but you could easily predict all of the things that are playing out if you had to control layer 2. Like, what would you do? You would make it a store of value. You would accept it. You would make ETFs. Okay. You would make a whole bunch of things. Okay there, and then you would need Tether or stable coins to purchase your debt. And as Bitcoin grew, you would have this natural buyer of more and more treasuries so that people could interact in there. So it would fund that.
Jeff Booth addresses the limitations of stablecoins, which he believes are doomed to lose value against Bitcoin in the long run. While these digital assets may provide short-term stability, Booth argues that their continued use would inadvertently fund the very banking system that promotes centralization and control. He stresses that for Bitcoin to retain its revolutionary edge and decentralized nature, it must be adopted as a medium of exchange rather than just an investment asset. Booth further highlights the critical role of Layer 2 and Layer 3 solutions in ensuring Bitcoin's security and true decentralization, especially as it scales to serve a global population. He warns that many Bitcoin enthusiasts still measure Bitcoin's worth in US dollars, thereby reinforcing the outdated financial system they seek to disrupt. According to Booth, this mindset stems from the financialization of assets, which has created a misleading perception of wealth by valuing assets as stores of value rather than for their true utility. Bitcoin, he contends, is in the process of correcting this distortion, restoring assets to their real utility value, and challenging the old constructs of wealth. Let's go back to the interview and watch more clips to gain insights from Jeff Booth.
What is a stablecoin? It's something that's guaranteed, if Bitcoin stays decentralized and secure, to lose value against Bitcoin at the same rate as the US dollar. It's guaranteed to. So why would you use that? Right? You have a guaranteed loss against Bitcoin. But if you're trading the stability, which most people will do around the world because they think the US dollar is so much better than their currency, so they'll naturally do it. And you'll have all of these people around the world believing that, yes, I finally can use this other thing that is also funding the centralization of everything we're talking about. And it's a total so what we're talking about will happen, not might happen. Will happen naturally. So if you realize that all of these things would happen for sure, and you realize that for Bitcoin to be used as a medium of exchange natively, not on a stable coin or some other instrument, a VC instrument, and around some other token, then you had to build the same type of safety into layer 2 and layer 3 that exists in different types of extending the capability of Bitcoin out into different layers to allow it to be used as a transaction medium, a medium of exchange around the world. And you had to know that the momentum from history and the momentum from most people in the world would be moving the other way because they would want Bitcoin to go up in price relative to US dollars. So they would just be feeding the exact same narrative that would make the centralization of it happen.
We've missed the medium of exchange part, and we've just focused on the store value. What does it look like in your view?
Yeah, that's actually why these things are incompatible over a long time together. So in one system, Bitcoin, if it stays decentralized and secure, then all prices fall relative to it. To stay decentralized and secure, it requires being a medium of exchange. These are the tools, these are the early indication tools or protocols that are going to ensure that it remains decentralized and secure, and ensure that it moves into a medium of exchange. Without them, it would be highly likely that it would get captured. Essentially, all you would do is US dollar to gold, US dollar to petrodollar system, US dollar to Bitcoin. Nothing would have changed, right? And that and I would say the vast majority of even Bitcoiners today, because the Bitcoin, there's such a deep hole, are still measuring Bitcoin in price in the US dollar. And so I saw one of the questions that'll help people understand what I'm talking about here, and we'll try to kind of look at it from both systems in the question, but it had something about the financialization, right? Something, and help them to understand pricing in Bitcoin. And so over the last 30 years, everything you've ever known, and most people have made all of their money, not really made money, the entire wealth of the world is an artificial construct of extracting from some people, giving it to the other through an instrument of financialization. And through that financialization of lens, then it would look like houses have gone way up in price, because they would act as a store of value, because cash couldn't act as a store of value, because it was an inferior store of value. So you'd have to find other stores of value. Those stores of value became houses, those stores of value became stocks, and you start getting higher and higher bid prices on all of these stores of value that reinforce, instead of a house being a utility where you raise your family, it becomes a store of value. And then everybody races into the store of value, because if they're not in the store of value and only in cash, they're getting destroyed. So everybody goes and makes the same trade, pushing it up higher and higher and higher, further away from its utility value as a store of value. And then enter Bitcoin, and enter Bitcoin is repricing all of those to their utility value.
In related developments, Robert Kiyosaki, the celebrated author of Rich Dad Poor Dad, has made headlines with his daring prediction that Bitcoin's price will increase by 16,000% and reach a whopping $10 million. But what is it that makes him so confident in cryptocurrency? The solution lies in the United States' rising debt burden, which currently stands at $35 trillion and grows by $1 trillion every 100 days. This unsustainable debt load might trigger a hyperinflationary cycle, leading the dollar's value to drop and forcing a desperate search for other stores of value. Kiyosaki believes Bitcoin is well positioned to fill this vacuum. Its restricted supply, only 21 million coins will ever exist, and algorithmic creation make it an appealing long-term store of value. Unlike traditional fiat currencies, which can be produced at any time, Bitcoin's scarcity and decentralization make it resistant to manipulation and inflation. While some experts think that Bitcoin has potential, others question the practicality of a $10 million price tag. Such a valuation would indicate a market capitalization of more than $200 trillion, or twice the value of the whole global stock market. This raises concerns about what will happen to other investments if Bitcoin reaches such a high price. Is it a sign of a robust market, or a signal of oncoming economic collapse? Despite the pessimism, Kiyosaki and others remain optimistic about Bitcoin's long-term potential. Some believe it will quadruple in value by 2025, making it a potentially profitable addition to a diversified portfolio. How do you envision Layer 2 and Layer 3 solutions addressing the scalability issues that would arise if Bitcoin were to be used as a medium of exchange for the world? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.